Hey everyone, welcome back to QuestForAlpha. In my previous videos, I walked you through my simple two-step systems, buying during pullbacks and buying at zones where institutions leave footprints. But today, we're going to do something a little bit different. We are actually going to put this trading system to the test. We're going to go back 5 years in the past and see how this trading system actually performed during different market conditions, uptrends, corrections, limited downtrends, because most of the stock market has actually been going up for the last 5 years. And my goal here isn't to prove that this system is perfect. That's not really the aim. There is no system that's actually perfect at all. But it is to show you exactly how consistent and how profitable this system can be if it's followed with a discipline. If you want to keep learning things like this, how to trade smarter, make smarter investment choices as well, as opposed to harder, as opposed to spending a lot of time looking for opportunities, then please consider liking this video and subscribing to the channel so that the algorithm can recommend videos like this to you in the future and you're not going to miss our next breakdown such as the one we're going to see today. All right, well, let's have some fun testing out the system over the past 5 years. We can start with NVIDIA. Right now we are on the monthly chart. This is what we always want to do in order to check for the first two filters. If we go back in time, this is January of 2020. We need to identify some demand zones. Right now this is where the price action is. There's really no good demand zone because it hasn't really taken out a previous peak. Now all of a sudden we do see one, which happens to be this one. This has taken out a previous high. We see another one that was formed right over here, reaching for new highs. I'm just going to change the color here in blue. This also happened to be a good demand zone. Why? Because we had two very strong bullish candles reaching for new highs. This would have been also a very good demand zone because we had very strong bullish candles taking out a previous peak. In this case, at least, this was one and this was another one that was taken out. This zone is not gonna be utilized because the price never really reached there. This would have been another zone. I'm not gonna mark it here because obviously the price never really reached there. This is another zone, but we can see that the price reached once. Right over here, reached another one and went up higher. And then we shall see in the months or years to come, this is another demand zone that may be utilized. So the first filter was obviously that it is in an uptrend, and we can see clearly uptrend. We have the 10 above the 100, 100 above the 200 EMAs. We just marked all the demand zones. What we want to do now is we want to get a confirmation. Confirmation is the only way I utilize the system. You can obviously just have demand zones, and you can see sometimes it works pretty well. I mean, here it bounced a little bit and then dropped, bounced very nicely, bounced again very nicely. There was a win, bounced very nicely, and there was a clear win. The reason why I don't do it without a confirmation is because, well, this just happens to be a very nice chart. Not all the time these zones are going to hold. Yes, there is a higher probability of them working than not, because we are looking for trades that are in an uptrend, and strong demand zones because they're based on the two criteria that I just summarized. However, oftentimes they may fail, and I do want to have another level of confirmation. So we're going to dive into the daily chart, so lower time frame, to see whether confirmation was achieved. And if it did, we want to see how the confirmation played out. Okay, obviously here we had a demand zone. The price, we had a demand zone here as well. So the price came into the demand zone. This is not a place where I would consider entering because the 10 EMA never really reached below the 200 EMA. So this move here is not something I would have been interested in. The second move though, I would have. So because yes, the 10 came below the 200, it started going up. It did go above not only the 200 and the 100 with this candle, but there was really no consolidation. When there is no consolidation established before the price goes above these 100 or 200 EMAs, then I'm not interested. So in this case, there was really no play here, even though there was a nice move. And then the price actually came below here. We can see it's very nicely below actually. We have the 10 EMA now crossing above the 100, forming some sort of consolidation here. The price did close above the 200 EMA, but that's, to me, it's not very significant just yet. I just want to change the color, make it a little bit easier to see. Let's see what happened there. Oh, this is where the price departed from the consolidation, and this is where I would take a look at and confirm that yes, this is something that I'm very much interested in participating in. I generally leave at least one more day to see how the price behaves. So if the price is somewhere here within this candle, it doesn't really necessarily have to go above it. I would still be interested in participating. So let's see what happened. Actually, the price dropped. So now I'm thinking if the price comes up here, then where it started on that previous day, then I would be participating. Well, actually the price started dropping. Now, why would I participate? In what situation? There was some sort of consolidation here, but this is really the main consolidation. If the price decides to go above this high here, then I would say that this is a good confirmation. So not only did we have this two conditions fulfilled, where we had a consolidation, we had a price above the 200 EMA, and then also the part departed the consolidation, which would have been this candle here. But we also are, if we see the price is really wanting to go higher than this point here, and ideally it closes above, then that's what I would do. So in this case, place that, drop the stop somewhere below. We can be below the consolidation or below the previous low. In this case, let's just have it underneath the consolidation. It's a flexible stop loss anyways. And what we're going to do for the time being, we're just going to mark a 2-to-1 risk to reward if this plays out like it did, and we're just going to mark a 2. If it drops below the stop loss and it's a decision where I would have made to close the trade, then we'd mark it with a -2 or a -1 depending on how much it drops. So let's now take a look at the next demand zone that was being created. You could argue that the price actually reached this point here and it did bounce, but the 10 EMA never really reached below the 100 and 200 EMA. In this case, this actually happened, which is very good. He did come to the zone. And now the question is, was there any consolidation here that was formed before the price reached above it? So one could argue, and in this case I'm arguing, that there was some sort of consolidation right over here. Now I would take some of these candles too. Although anything below the 100 and 200 EMA is not something I would consider very strong. So in this case, it's really these few candles where the price did not really move up, not really move down. It just ranged around here, with this strong bullish candle right above the consolidator, closing right above the 200 and the 100 EMA. For me, this would have been a good way of confirming that I want to participate. And then we can see at least the 221, a stop loss, soft stop loss somewhere below the consolidation. And then we can see that that actually happened. Now, why did I enter at the end of the day as opposed to waiting for another day to happen? Because this actually was a bullish candle as opposed to what the example we looked at over here. You remember that was a bearish candle that had closed. So it went up and it closed down. So there was really an opportunity to kind of like follow. Is it going to try to go a little bit above to the previous day's open price or not? And never really reached. So for that reason, I decided to hold off on that trade. But you could have taken it very easily and still had a win. While I have rules for this setup that I follow, at least for the first two filters, the confirmation step, I do have some criteria, and that is not completely rigid. There is a lot of opportunity for some sort of discretion, as long as you're keeping the discipline and you're remaining consistent with the approach that you take to establish what your confirmation is, then you should be good. You have to understand that the edge already exists, and the edge is in the fact that you have met the first two filters. So now it's really playing and optimizing the strategy to increase the probability of the win, adding additional confirmation. You can actually go 2 levels of confirmations if you want to. We can do that in following videos. For the time being, I think this is simple enough. Some sort of consolidation, get the price to be above it, and then pull the trigger. There's going to be some losses, there's going to be some wins. In this case, we had 2 pretty significant wins. And that is really it. That's really on NVIDIA. Let's take a look at another stock here, perhaps Microsoft. We can go back on the monthly time chart. Go back in 2020, January, which was right over here. Did we have a good demand zone? I would argue that this was a pretty good demand zone. Very strong consecutive bullish candles. Price came down and exploded, so we're going to take a look at whether we had an entry here via the confirmation. This would not have been a good demand zone here because these candles are pretty weak. They did not really take over the previous peak. Nothing here. This would have been a good demand zone. You could say that this is also a good demand zone, but this to me is only one candle, very, very strong candle. I would skip it. I'd like to see at least two strong candles, or at least taking out a previous peak. In this case, we were reaching for new highs. So I'm going to skip this as a zone, and we can see that it actually failed. But the previous zone seems to have held a little bit, not much. And then one thing to notice here, if the monthly candle closes below the zone, then that zone is invalidated. You no longer consider it as a play. So in this case, this is the only opportunity we would have had for this demand zone. There is another demand zone right over here. The thing is that the price never really reached, and that is because we had two strong candles taking out this previous high. Nothing really here, and then we're all the way at the top. So at this very moment, we are going to go to the daily time frame, and let's take a look at whether there was any confirmations established. So obviously the 10 became the 100 and the 200. It consolidated in this region here. You can see that this is a pretty good consolidation. The way I like to draw this is I'd like to take the wicks and the full body, like everything. And as we can see here, yes, there was a candle that closed above it, but that wasn't significant. So that ultimately becomes a part of the consolidation. Then we had a candle that closed below. And then these consecutive candles. And then we had a pretty strong candle that closed above this consolidation. At that point, I would be interested in going long. So you can place it that way. You can put the stops loss somewhere here. And then we can see what the 2-to-1 was. That's almost like a 32% gain for a 2-to-1. And that was actually a win according to this methodology of risk management that we have. Let's take a look at what happened here. Perfect. Okay, so this is an example where it wouldn't have worked out. This was very similar to the previous, a nice consolidation that occurred. Price reached above it. This would have been a clear entry. 2-to-1. Price dropped here. At this point, once the price drops here and drops a little more, I would be looking at to see if it wants to consolidate and start going up, or if it's going to drop a lot lower. So let's go one candle at a time. When I see this, that it does not want to stop, this would have been my exit here. And in this case, that would have been basically, if this is it's almost like, let's just call it a -2. And then the price did decide to go below the zone and go a lot higher. Price never reached here. Had it reached, I guess maybe we could have had a play, but it never did, so we can ignore this trade. If there was a situation like this where there was a major gap, where one could have considered this as a consolidated major gap, this to me is too big of a gap, too large of a move away from the consolidation, that I would have still decided to stay away. So in this case, we would never have looked at this as a play because the price never really reached my zone. Let's take a look at Apple. This is the mark for pretty much, okay, January of 2020. We can see that it was in an uptrend, even in January of 2020, 10 above 100, 100 above the 200 EMA. We're looking now for good demand zones. So that was a good demand zone right over there. It seems like the price came down, reacted from it. This would have been another very good demand zone, but we're not going to mark it because the price never really reached there. there's a strong demand zone right over here, the last candle. And why is that? Well, that's because we had a previous high. We had 1, 2, and 3 strong candles that had taken the previous high. There is another demand zone here, a similar way. Why? Because we have 1, 2, and 3 very strong candles taking out this previous high, which just happens to be the less bearish candle that created the previous high, and we see that the price actually reacted from there temporarily. It was not the best demand zone here because this candle was very weak. We do see a good demand zone here, less bearish candle. Why? Because 1, 2, pretty much 3 strong candles taking a previous high. You can argue that there was a large wick, but ultimately these were very strong body candles, especially relative to the price action here. And we can see that the price did bounce off of here very well. Now let's go down to the daily time frame and see whether the confirmations played out and whether these trades were going to be winners or losers. On the daily time frame, we see that the 10 EMA came down below the 200 EMA and 100 EMA. We can see a little bit of consolidation here. We see that the price reached right above it. At that point, not only that the price is above the 100 and the 200 EMA, but also is above the consolidation. We can reach for a 2-1. That was an easy win. In most situations, in most stocks, just so you know, what ends up happening is the price actually pulls back significantly and the 100 EMA comes below the 200 EMA. So at that point, what I do is I wait for the price to come above the 200 EMA, and that's what I've mentioned in previous videos. In this case, the pullback is very quick. It just happens once very rapidly and comes back and bounces off. So this is up to your discretion. It depends on how the overall market is running during a specific time, whether it's really going through some sort of consolidation. But the market, I don't mean just a stock. I mean the overall US market, US economy. In this case, it was moving very, very rapidly here, and as you remember, some of the other stocks were behaving in a very similar manner also, which is why this could have probably been a good play at that point of time. So let's continue. We have this demand zone and we had this demand zone. Did we have any play here? Well, the 10 EMA never really reached below the blue, or in this case the 200 EMA. In this case that happened, and then one would have waited for the price to come above it. That never really happened. The price actually reached to the zone below it, and now we are looking at that specific price action. So comes to the zone, comes up here. This to me is a decent consolidation. The price did react, came above the consolidation, closed above the 200 EMA, and I would have considered this as an action item for a 2-1. Now you can see that the price never really reached. It actually started coming down. At that point, we continue to monitor. You could have set your stop to break even. We're not going to manage the trade right now that way. We're just doing strictly 2-1. It's either a loss or it's a win. If it reaches the stop loss, again, we don't just exit the trade. We just monitor what's going on. It's a soft stop loss. We can see that the price ranged, came up, still does not want to go below this point. We're still in the trend. At some point, The price did reach back here. If we take a look at this level, see the price never really went way below that level, maybe in this candle here, but that would have been a very strong indication for me to exit. And at that point, let's see, okay, at that point what happened was reach below it here. In this case, I would have exited the trade somewhere here. So if you look at this, this is almost like a minus 1.5 loss. Comes back to the zone. Let's see if we have another opportunity, and we do. There's a nice consolidation. Price reaches above here. I would have participated again in this move, and there we go. We're able to get to a 221, and I think that was all the setup. No, there was another setup here. Price reached the zone, gets here, we see a clear consolidation. We're expecting for the price to go above the consolidation because it's already above the 200 EMA. As a matter of fact, that doesn't really happen. Price reaches down, but very quickly goes above. With this candle here, this is a strong indication for me to say I actually like this, and I would enter, and that ends up being a 221 as well. So Apple in the last few years did have few setups. Now, if the question is, well, why did you do this? Why didn't you extend maybe the zone? And extending the zone, this doesn't look like a consolidation. It's because we did not see the price creating lower lows, lower highs. It was actually a pretty quick, one very strong candle. There was a little bit of consolidation here, 1-2 candles, and the price decided to go above it. And at that point, with a strong consolidation and with the strong candle close above the consolidation, was a good indication for me to participate in the market. And this is actually something that I've done in the past, especially for this stock. I did invest during this time. All right, let's take a look at Google. On the monthly time frame, we can see that this was in an uptrend. Let's refresh the chart. For some reason, the 200 EMA doesn't show up because maybe not enough data was loaded, but please ignore it for the time being. This is definitely in an uptrend, and the 200 EMA would have been somewhere below here. Now, if we look at it, do we have any strong demand zones? Yeah, there is one over here. Took out the previous high. Some strong consecutive bullish candles, and there was also another demand zone here, although yeah, I wouldn't have called it the best demand zone, although it did the job, because on this candle it actually took the previous high, which just happened to be the less bearish candle before the move, so we can leave it there. And we can actually see that this demand zone worked out well. The monthly candles never really closed below it. As a matter of fact, this following month, yes, it started below, but it actually closed above it. So this would have been still a valid trade. And we're going to take a look at later on what had transpired during the confirmation phase on the daily chart. Let's take a look at other good demand zones. This I would have said maybe it's a good one, but there is this one intermediate candle here, so I would have probably skipped it, even though, as you can see, this was probably a very good one. This is actually where it stopped. Or you could have stated that this was a good demand zone right over here, because it did have two strong bullish candles that took the previous high, which just happened to be the last candle before the move up higher. It's not the most convincing zone, to be honest. But we can take a look at what actually transpired here. It is not something I would have planned on taking during this time. Let's take a look at this one. This is a pretty good demand zone, I would say, for two reasons. One candle, two, three strong candles, even though the presence of that wick. And then we did take over a previous high here, where the candle actually closed. And there were two opportunities for a play here. So let's go into the daily time frame and let's see how those three potential setups played out. Okay, in this case, the 10 came below the 100 and the 200 EMA. There was a consolidation that occurred in this region. We would wait for the price to go above it. Nice. There was a gap, no doubt there was a gap. In that case, what I do is, how big is the gap? The gap doesn't seem to be that much higher than the consolidation. Sometimes I can wait for the little pullback so I can get a better entry into the market. In this case, not knowing what the next candle is, I would just take that one, and I'm not gonna be too picky about it. I'm gonna set for a 2-to-1. And bam, that worked out. So let's mark it as a 2. Okay, coming back to this demand zone. This is perfect. It did create a consolidation here between the 200 and the 100. It's in a nice region. We see that candle closed above the 200, and it also closed above the consolidation. At that instance, can set up for a 2-to-1. And let's take a look at what happened here. Looking at this, we saw that the price actually came below it, below our stop loss, which again, it is a soft stop loss. Price started to reach down. I see it consolidating at that point. If the price decides to come below this low, I would consider ending the position. Come below it and actually close, but price started to bounce off, and then it took off, which resulted with another 2-to-1. Now, if you want to be strict, this is again why it's a discretionary move, this whole confirmation approach, and it's a part of the trade management. You could close the gap here, wait for the price to close below it. Let's just say it closed here and you decided I'm going to take a loss. That's perfectly fine. Just take a loss there, come back, and then as soon as the price comes above this high, you can consider re-entering. So in that case, it happened here, which was at the same point where we would have entered, and then you take -1 and then you take a +2, you're still in profit. We have this demand zone, we have a consolidation that happened in this region. This is another one of those examples where the price action for the 10 EMA did come below the 100 and the 200 EMA, but the 100 never really kind of like swapped positions with the 200 EMA. The move was pretty quick. And in that case, it's not only that we wait for the price to reach above the 200 EMA, which is this case, which is what I've talked in the past, but you really want to make sure that it reaches above the 100 EMA as well. In that case, similarly to what we've seen before, we have a bearish candle which happens to close above this zone. What do we do then? We wait for the next day. We see if the price wants to go higher. In this case, it did not. It actually came down. Another bearish candle there, bearish candle, and the price is actually dropping down. That point, this is what we have: a much longer consolidation, a bullish candle. In that case, I would have said, yes, let's enter the market and target a 221, which happened to be right over there. And that worked out. Price then reached back to the zone, and we can see how the 100 and 200 swapped. They crossed each other. We see a small consolidation in this region. 1, 2, 3, 4 candles, right? As we draw the zone, we want to take a look at all the wicks. Now, with that candle closing above the consolidation, above the 200 EMA, that's a confirmation for me to go long and to target a 221, which ended up happening right there and results with another win. And let's see if there was another setup. No. So that was 2, 4, 6, 8. Pretty nice play on Google over the past 5 years. Let's take a look at now maybe something that's not in the high-tech industry. Maybe something like Visa, for instance. Let's take a look at on the monthly time frame. What was Visa's price action? Look at the monthly time chart. I can remove everything that I have marked here. Let's go to 2020, January 2020. I mean, if we see the market here, this is a clear uptrend, even though we don't have the 200 EMA because the chart hasn't loaded enough candles. Let's take a look at some of the zones. So this is a good zone here. Right below it, there was another zone, and there was also this zone here. We know that this failed. This actually, and this one, they were able to hold the price. Let's take a look at whether there was another demand zone that was formed. We're looking for multiple consecutive bullish candles. Immediately you notice this. You notice this. You could say you notice this one too, because there's very strong 2 bullish candles, and you can see that that actually reacted pretty well. And then let's go to the daily time chart to see if the confirmations worked out and would have given us a method to, or an opportunity to trade. We see that within this zone, the price never went above, so the 10 EMA never really went above, or the price never went above the 200 and the 100 EMA. Within this zone and this zone, that actually did happen. There was a consolidation here, but the consolidation, as I mentioned before, I really wanted to be a lot closer between the 200 and 100, or to be consolidated around the 200 EMA, where generally the 200 EMA just happens to be above the 100. It's not in this case, they're just super close to each other. So in that case, I'm looking at this as a consolidation, and I would be expecting the price to come above it, which is perfect. So at that point, this is what I would have targeted for a 221. And after some time, that actually did occur. We're just gonna mark it as a 2. This is the other demand zone. Price never reached. We ignore that. Take a look at this demand zone here. We're looking for the 10 EMA to come below this longer EMAs, the 100 and 200 EMA. That never really happened here, so this setup here is invalidated, or we ignore it. And that's really it. There was really no play on any of these zones. There was only one move on Visa right over there. And let's take a look at maybe Chevron, oil and gas, and then we can call it a day. This is our monthly time chart. Again, we're going back to back to 2020. Okay. Now, what do we see here? We do see an uptrend. This is an interesting one, so let's take a look at it. We do see an uptrend. We're looking for a strong demand zone. This is a strong demand zone right over here. Why? Because strong bullish candles that took out this high. Nothing here. I wouldn't have considered this to be a strong demand zone because it didn't take a previous high, even though these two candles are pretty strong. And what we can see here is that the price collapsed, went through the zone, and we can take a look at it to confirm that there was really no setup. I bet you that there wasn't. But at the same time, we do see that the 10 EMA actually crossed into the 100. At that point, this is no longer an uptrend. So what we wait for is for this to occur, and that occurred somewhere here. So now we are still in an uptrend, and then we can set up some of these demand zones, such as this one. Something that was previously marked, no demand zone there. It's a ranging market. So actually, here's a good example where we wouldn't have had any sort of entry on Chevron, and in this case here we can just confirm that there was really no play on the daily time chart. Yeah, the price just came down. It never really bounced off and came above the 200. Okay, so with that, I think we went through how many examples? 1, 2, 3, 4. Did we do Amazon? I don't think we did Amazon. We did Visa, 5, and we did Chevron, 6. Maybe we can just do Walmart, one last one. We can clearly see that this was in an uptrend. I will just remove some of these other markings. Let's take a look at uptrend has been met. Do we have a good demand zone? This is just a single candle, so I wouldn't consider this as the best demand zone. One could argue that 1 and 2 strong candles here taking a previous high, so I think we've done it in the past, so we can take a look at it as well. Here we can see that actually that one worked out, so hindsight, it did work out. These two candles too, let's just say that was a good demand zone. Actually did work out too. That's a decent demand zone. Why 1, 2, 3 bullish candles taking out a previous high, and then a few demand zones here, but the price never really reached. Yeah, so this would have been a good demand zone, this would have been a good demand zone, the price never reached. So right now we only see 1, 2, 3 different setups. We would go into the daily time frame to see if there was any confirmation that was formed. Nothing here because the 10 EMA never reached below. In this case it did reach below just a little bit, but there was no real confirmation, no real consolidation afterwards. Price reaches above. This is a good consolidation. Again, I guess I had this chart already. This was a good consolidation here. The price reaches above it. What is the consolidation? It's, well, in this case this is a 3 candle consolidation. I would have probably ignored this. This is just not enough for me, so let's ignore that. No setup there. We are going to look at what happened here. This is a nice move down. Price retraced, waiting for a consolidation somewhere in this region. That never happened. There was actually a larger gap up. Price comes down. Now this is a good consolidation. Now what do we wait? We wait for the price to come above the consolidation, but in this case I would love it if the price actually comes above this high as well and closes. If the price starts to break down a little bit, then I no longer need to worry about this previous high. So let's take a look at, I think this is still kind of part of the same consolidation. Price came above. Bam. So in that case, not only did we have a consolidation, not only did we have the price to come above this high with this candle, which is very strong. This is a long-term play, so you can decide whether you want to have the stop loss here or stop loss below this consolidation here. In my case, I'd rather have it somewhere here, otherwise I will wait forever to reach a 221, and we'll monitor the price in the same way. And then for a 221, which did take some time, but it eventually reached. That's a 2. And then there was another setup here because of this demand zone. Price came down. The 10 EMA crossed into 200 EMA. We're waiting for some sort of consolidation. 1, 2, 3, 4. This is kind of a consolidation. Strong move above it. At that point, what I would do is, because maybe it's not the strongest consolidation, I would wait to see a confirmation. Strong candle. This one is a bearish candle. If the candle, the next candle closes above here, then I would consider going. Yep. I like what I see. and then we go for a 221, and that was also a good win. We didn't mark that. Oh, we did actually. With this, I'd like to close with just a few more things. I understand that this backtesting is not a traditional one. It's not one where you go one candle at a time. I simply did not want us to spend too much time loading the monthly candles, which can take some time to load and to refresh. Instead, we were going a lot faster. We were just trying to understand whether a stock is in an uptrend, whether the demand zones are valid, and the last thing was whether a confirmation was valid or not on the daily time frame, based on a very simple trade management strategy, aiming for 2 rewards as opposed to risking 1%. We were able to observe a pretty good profitability. So if we count over however many stocks we had, I think we had like 1, 2, 3, 4, 5, Visa 6, and we had I think it was Chevron, right? 7 stocks. We had a pretty good success rate, at least in how it performed over the past 5 years on these specific stocks. With that, I'd like to thank you all for your attention. If you're interested in the content, again, I encourage you to like the video and subscribe to the channel. Thank you, and until next time.